ऑल राइट, वेलकम एवरीवन। मेरे साथ हैं पंकज पांडे सर एंड हम लोग एक बार फिर मार्केट रैप के लिए इधर हैं सर से समझने के लिए कि इस बार मार्केट में क्या हुआ। सर, निफ्टी तो हरा ही हरा होता जा रहा है जब से इलेक्शंस में, उसके बाद से, इनफैक्ट उससे पहले भी था। एंड इट लुक्स लाइक कि ये जो सुबह है इसकी रात होगी ही नहीं कभी। सो क्या चल रहा है मार्केट में?
Hi, good evening, Vishu. I think ऐसा नहीं है. Overall, if you look at market, definitely seen a pretty good rally and across caps. And in fact, if you look at Nifty में जो 50% of the Nifty performance was not coming, especially from banks and IT, especially IT. IT was considered to be a laggard. I think that has sort of changed. So IT has started to do well because the prospects of rate cut in US have brightened. So that is sort of helping Nifty to sort of do very well. And not to say that mid cap and small caps have also been sort of doing very well. We have seen 23% kind of a rally in mid caps post election lows, 28% kind of a rally in small caps, and which is a very massive rally in a very short span of time. So things have been very good, but what I would sort of suggest is that we keep getting corrections in the market at regular intervals, low double-digit kind of a corrections. That cannot be ruled out, and I think since market are slightly in a overbought situation, so some bit of a profit taking can definitely happen, and we are already seeing a bit of that happening on Friday. And I think overall, since the next week is a very important week from a budget perspective, a lot of eyes are there in terms of what the FM does. So, which is why also people or investors have been booking some profits ahead of the event. And so some cool off in the market is a very welcome cool off which can happen. And I think nothing fundamentally wrong in the market, but yes, you can't expect a very linear rally to sort of keep panning out. So which is why you need corrections in between. Probably, I think last 1 or 2 days, mid caps have seen that, and large caps have seen today. So possibly we might extend some bit of a correction there. But our sense is that we are headed towards 25,200 plus kind of a levels. So overall, nothing structurally negative we see in the markets.
Right, sir. So you mentioned IT, which is definitely come. As I think we had Infosys, LTI Mindtree, we had Persistent coming up with results this week. So, can you tell us a little bit about these companies? What happened there, sir?
So one thing in IT is that no negative news is good news. So when you look at Infosys numbers, the numbers were definitely good. The company's revenues quarter on quarter have gone up by 3.6%. There was a margin improvement, obviously because of some higher utilization, and then value-based selling definitely sort of helped. The deal wins have also been good. So nothing much to sort of complain in the Infi numbers. The guidance, they have upped the guidance. So earlier the guidance was lower. Now they are guiding for 3 to 4% kind of a revenue growth from 1.1 to 3% kind of a growth. But I think our sense is that in IT, since the sales or the overall numbers are yet to sort of pick up, so valuation wise, they are still in a sort of a tighter range. So Infosys, even if you are giving a similar multiple to say what TCS commands, it becomes a sort of a hold because it's currently trading at 23, 24 times. I think the valuation is a bit of a challenge, and recovery is still not expected to happen this year. So which is why you can't really upgrade the numbers. But yes, Infi definitely came out with better set of numbers than was expected. I think LTI Mindtree numbers were okay because see, one thing we have been watching in LTI Mindtree is the synergy benefit because they had merged these two companies. But what we have seen is that the margin profile or margin performance has been weakish. I mean, the aspiration is to take the margins to 17, 18 odd percent, but that is going to take some time to sort of pan out. So probably in FY26. And that is where the slight disappointment comes from because that is the one thing which is sort of holding the re-rating of the stock. Otherwise, performance was okay. They delivered about 2.6% kind of a growth. And I think even with this company, the same challenge is that unless you don't deliver on margin performance, you're trading at 26 multiples. So which is why we are keeping a hold on the stock. LTI-90 also decent numbers, but for further re-rating, I think what is required is an improvement in margins. I think Persistent is one of the few companies which have been delivering industry-beating growth rates. So they delivered about 5.6% kind of a quarter-on-quarter growth, which is a very good set of numbers, 16% kind of a growth. But while a lot of these stocks which I spoke about are trading, say, somewhere about 25, 26 times, this stock is trading at 41 times FY26. So while it is delivering industry-leading growth, the deal wins have been okay, good. We have been seeing some bit of a decline in margins, but that's not a bigger worry. But I think for this also to sort of get re-rated, the industry-leading growth needs to be even more better, because at 41 times, you really do not have much of a comfort on the valuation.
Right, sir. So moving on next to Just Dial, I think there were some good numbers dialed in there as well. So what is our outlook on Just Dial, sir?
So Just Dial, it's not a typical IT company, but came out with a very strong set of numbers. The overall growth was about 4% quarter on quarter, about 13.5% kind of a YY growth. And overall sense is that the growth is going to be in the around 15 odd percent. Now, Just Dial, it's a peculiar case of a company which has got a market cap of nearly 10,000 odd crores. And when you look at cash and investments to the tune of about 4,755 crores. Now, this cash has been there in the company for quite a period of time. But this is the first time the management gave an indication that they will have some capital distribution policy with an intention to sort of distribute 100% of the annual profits in a tax efficient manner. I think that led to a pretty good jump in the overall share prices of Just Dial. But even with that move, we feel that there is still value in this. We have a target price of about 1,500 on the stock. So I think this is one company where the growth is good. It is sitting on good amount of cash and now looking to sort of distribute cash. So that way, I think this stock has further steam left even now. Vishu, I can't hear you. I think you are in mute.
Sorry. So moving on to Bajaj Auto, what's the news update there, sir?
So two-wheeler as a category has been doing very well in the recent past, and Bajaj is one of the most capital efficient companies which gets or which makes the highest number of or highest percentage margins. So numbers were definitely good. We have seen that the top line growth was 16 odd percent, margins was one of the highest, 19 odd percent. Nothing wrong in terms of numbers. There is a good amount of premiumization, what we are seeing. So average selling prices or ASPs have improved nearly 50% in the last 3-4 years. So there is a good amount of premiumization which is at play. The company is doing very well on the electric two-wheeler front. They are the third largest player now, and they are looking to sort of scale this up to about 1,000 odd stores going forward from nearly 250 odd stores as of now. So 4x kind of a number is what they are talking of. But I think Bajaj Auto overall the growth is expected to be fine. But I think we've seen a pretty good rally in the stock. So whatever stretch we do, I think it's very difficult to sort of give a higher multiple. So it's trading at 25 P multiples. So if the stock corrects, it's a good buy. But let's hope it corrects in this overall softness in the market, what we are anticipating. But overall sense is that while the domestic market is going to grow at 6 to 8% in terms of volumes, obviously the premiumization will also come in. What they're also guiding is that from second quarter onward, the export as a segment will also sort of keep doing well. So good set of numbers. Only complaint is the valuations on a higher side.
Right. Awesome. Sir, next up, let's talk about defense a little bit. I think there was yet another purchase order in the making for Navy. And how can retail investors be a part of this growth story?
So I think retail investors have been part of this growth story in defense for quite some period of time. I think this is a time to be a bit cautious because our sense is that valuations are definitely rich for most of the defense PSUs. Any defense PSUs trading in excess of 45 times. So definitely it is there. Any kind of a weakness, again, I would want to reiterate as should be used as an opportunity to accumulate some of these names. Because defense is one sector where you'll keep on seeing developments happening. You have two of the major neighbors who are sort of doing or who are sort of upgrading their technologies, the likes of China and Pakistan. Now, coming to this frigate order, it's an extension of the previous kind of order what both these Mazgaon Dock and GRSC got. And I think it's acceptance of necessity. So obviously, it is going to take some time to sort of convert into orders. But defense is one space where our sense is that with the kind of neighbors what you have got, and so even if you look at in Air Force, the competition or the rival countries are deploying 5G aircrafts. So from that perspective, you will continue to see a lot more spend coming on the side. Only hitch is that we have seen a good amount of price performance, probably some consolidation, some correction is what is required. And once that happens, I think defense is one sector which has got a long runway for growth.
Right, right, sir. So moving on to the finance sector, I think we had a few from within the finance sector, a few group of companies coming up with their results. L&T Finance was there, HDFC Life Insurance, HDFC AMC came up with their results. So what's happening in this sector, sir?
So L&T Finance used to be a wholesale NBFC. Now it is a retail NBFC. Nearly 95% of the book is retail, and retail has grown at a pretty good rate of 33 odd percent. And asset quality has been good. Margin profile has been even better. And ROAs have improved to about 2.68 odd percent. So this is one NBFC which we continue to like, and we have a buy rating on this. And life insurance, I think, is coming back overall because HDFC Life came out with numbers, while the VNB margins declined because ULIP is as a category is a lower margin category, and that is sort of doing very well for all the insurance companies. So margin profile was softer. But what the company is guiding is that they are looking to sort of double their VNB in the next 4 years. So pretty decent kind of a growth is what they are talking of. And which is why I feel that this is one sector or one stock which can sort of do well. Last few years have not been great for life insurance companies, but HDFC Life, I think, is a marginal buy according to us, and which is why we have maintained a buy on this stock.
Right, sir. Sir, moving on to the next stock, which I want to discuss, I think this was also recently one of our picks from the research, our own research as well, and it has moved wildly in the recent few days. So that is IRDA. So and now the results have also come. So what is the story playing out there?
So this is one stock which we have been liking structurally from a portfolio perspective. The numbers came out to be pretty good. So they've delivered about 34% kind of improvement or growth in AUM. And so asset quality has improved. I think why we are liking this company is that whatever the green transition you are going to see in the country, a lot of a big role is expected to be played by some of these specialized NBFCs. So IRDA is one of them, and our sense is that they can continue to deliver 30% CAGR kind of a growth in AUM for a decent period of time, given the opportunity size. Now, the stock had rallied about 50% the moment we had sort of given. I think post that we have seen a decent amount of correction. And our sense is that probably we are nearing the level of correction. So from that perspective, we would be maintaining a buy on the stock. So we'll be sort of coming up with an update. We were anticipating a profit taking to sort of happen, given that 50% kind of a move in a very short span of time is slightly on the higher side because company is only going to deliver 30% kind of a growth. So from that perspective, IRDA is another stock where we don't have complaints. I think it's a stock to be bought in every weakness.
Awesome. Sounds great, sir. And finally, also after talking about so many great stocks, we'll come to the hidden gem of the week. Which will it be, sir?
So since markets in a slight consolidation mode, PSU banks is one category which has not really done much in terms of price performance if we look at in the last 3 to 6 months. And which is why I'm recommending Indian Bank with a target price of 700. Now, this is a well-managed bank. Overall, when you sort of look at this bank is going to grow at 12-13 odd percent. That is what the management guidance has been. and margins are going to be steady at 3.4 to 3.5%. The retail, agri, and MSME constitutes about 62% of the advances. So gone are the days when the PSU banks used to be wholesale heavy or corporate heavy. And then CASA is also quite decent at 40 odd percent. So I think all in all, a decent set of numbers. ROAs are expected to improve to 1.1 to 1.2%. Our sense is that this is a well-managed bank and should do well from here on. And obviously, a lot of them will tend to benefit from if there is a decline in yield, because we've started seeing bond yields softening, and also the bond inflows have started to sort of happen. So that also would have some positive rub-off on these PSU banks as well.
Awesome. Great to hear that, sir. Well, this was it. Thank you so much, Pankaj sir, for taking out time for us. And thank you so much, everyone, for listening to us. We'll be back next week with another wrap for you. Thank you so much for your time.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.